All right, let's talk about BigBear.ai. They just made a huge $250 million bet to completely change their future. So the big question for any investor right now is this. Is this a genius move or a desperate Hail Mary to cover up a business that's actually shrinking? So on the surface, things looked okay. The company pulled in $33.1 million in Q3 revenue, which, beat what the analysts were expecting. But honestly, that's not the real story. The number you really need to pay attention to is way, way bigger. And here it is, the real headline grabber. A massive $250 million deal to buy an AI platform called Ask Sage. You have to understand, this one move changes everything about why you would or wouldn't invest in this company. Now, the CEO, Kevin McAleenan, he put it this way: we're going on offense. Great soundbite. But we have to ask, is this a real game-changing play? Or are they just spending a ton of money to paper over some serious cracks in their original business?
Okay, so let's break this down. First, we'll look at the bull case. And really, this all comes down to one thing, this big acquisition of Ask Sage.
This wasn't just some random shopping spree. The CEO was really clear about their strategy. He said they were looking for disruptive, platform-level AI technologies for national security. And, well, Ask Sage fits that description to a T. It's right in their sweet spot. So what is Ask Sage anyway? Think of it like this. It's a super secure sandbox. It lets places like the Pentagon or other government agencies use powerful AI models, the GPT-4s of the world, with their own top-secret classified data without any of it leaking out. This is a huge deal because it solves one of the biggest roadblocks for AI in government.
And look, this isn't some pie-in-the-sky startup they bought. Not at all. Let's look at the numbers. They're on track for about $25 million in recurring revenue next year with 6x growth. That's explosive. And they're already in the system. We're talking over 100,000 users across 16,000 government teams. They've got the super important FedRAMP High security clearance. Oh, and the cherry on top, the founder of Ask Sage is coming over to be BigBear's new chief technology officer. That's a huge win.
So, like the CEO said, they're not just buying an idea. They're buying a ready-to-go turnkey platform that's already working at scale where it matters most. This gives them instant credibility and a major head start. Okay, so you're probably wondering, where'd they get the money for this? Well, check this out. BigBear.ai is sitting on a mountain of cash, over $456 million. That's not just a rainy day fund, that's a massive war chest. It means they can write this check and fund the whole integration without even blinking. All right, but let's not get carried away. It's time to look at the other side of the coin, the bear case. Because while this acquisition is definitely exciting, you could argue they had to do it. Why? Because their original business, well, it's got some problems. And the numbers don't lie. Just look at their core business performance. Revenue? Down 20% from last year. That's a big drop. Gross margin? Even worse, down 31%. And that margin percentage is getting squeezed. Pretty much every important metric here is pointing down. So what's their explanation? They're blaming it on lower volume from some of their older Army programs. Now, this is really important. It means this isn't just some one-time bad quarter. It points to a real worrying trend in the very foundation of their business. And get this, at the exact same time their revenue is falling off a cliff, their costs are going through the roof. Their operating expenses, or SG&A, shot up by almost $8 million. I mean, come on, revenue down, costs up? That is just a classic recipe for burning through cash. So where's that money going? More on labor, more on marketing, more on these strategic initiatives. Now, you could say they're investing in the future, which is fair, but they're doing it while the main part of their house is on fire. That puts a ton of pressure on their profits, or what's left of them. Okay, so revenue's down, costs are up. How does this all shake out on their balance sheet? Well, this is where the story gets really, really interesting. It's a tale of a total transformation. Because they went out and raised a bunch of money, they now have an incredible $715 million in total cash and investments. That is a huge safety net. It lets them absorb the hits from their old business while they pour resources into making this new Ask Sage acquisition work. But honestly, the most shocking part is right here: stockholders' equity. You have to see this. In just 9 months, they went from being $3.7 million in the hole to having $610 million in positive equity. I mean, That's not just a change, that is a complete night and day turnaround for the company's financial stability.
So what's the bottom line here? By raising all that cash, they've basically fixed their broken balance sheet. And that gives them a ton of flexibility and, more importantly, a long, long runway to see if this new strategy can actually take off.
But, and this is a big but, we can't just ignore the past. You see this number? That's their accumulated deficit. We're talking almost $860 million in losses over the years. It's a huge red flag that reminds us, hey, even with all this new cash, this company has a long history of not making any money.
Okay, so let's bring it all together. What's the final verdict here? What should an investor do? It really comes down to a classic, super high-stakes bet on a company trying to pivot. You've got two very different stories playing out at the same time. Let's put the trade-off on the table. The bull case is simple. You're betting on a game-changing acquisition in a red-hot AI sector, and they've got a fortress of a balance sheet to back it up. The bear case, you're looking at a core business that's sinking, and you're worried about the massive risk of whether they can actually pull off this integration before it's too late.
So, when all is said and done, it really boils down to this one single question. BigBear.ai has bought itself a shiny new growth engine, and it's bought itself time. But is that new engine from Ask Sage powerful enough to outrun the decay in its old business? For anyone invested or thinking about investing, the clock is officially ticking.